All attendees are in listen-only mode.
Hey everybody, this is Preston Brent with our Trader User Group. This is for the trading week ending November 13th, 2015. We had a very interesting week. We finished really to the downside. It's the first down week we've had in 6 weeks. And what I've got on the screen here is the E-mini S&P 500 futures. And I want to give you a couple of different scenarios that we're following here with our group. And kind of where I was anticipating a little bit of a pullback. What I've got here on this daily chart, October we were up over 8%, about 8.5% or so, and it was one of the strongest months we've had. And there's some statistics that go back about 70 years that talk about a strong October, November, December, a Q4 period in the U.S. Equity markets, primarily the indexes. And it generally says the rule of thumb is that we finish in a strong part of the year. Now, the other thing I wanted to say is that when October has a very strong month, then that means November and December are traditionally weaker months. And then in the month of November, the weakest time of the month is in the first couple of weeks of November, which would be these first 2 weeks. So now we've got 2 more weeks to go, and we're kind of hitting a spot here that we're going to be watching very closely in our group. And I'm going to show you here. Next week, we got option expiration week. So the markets generally tend to grind up in an option expiration week, but we've had such a huge downdraft here fairly quickly. There were some, I think, some panic selling towards the end, but all in all, it's been, believe it or not, more of an orderly move. But you know, some of the higher flyers got crushed, primarily in the NASDAQ side. But what I wanted to show you here is I've got a Fibonacci extension that runs from the October lows up. I mean, if you look at the months here, this is at the beginning of October right here. This is the end of October right here. So we literally started almost at the bottom of this move up, and we finished almost at the top of the move right there for the month of October. So it was over 8.5% or so, 8.8, I think. And now I've run these Fibonacci's, and you can see here from the peak at 21.1025, taking us down to the bottom down here. And this was not an intraday low, but generally a closing low here down here. So a lot of people, and me too included, considered a little bit of a double bottom. So now we're pulling back, and I had said that in a very strong bull market, a 0.236 is a common resting point. And if I were to extend this over to the left, I'll try and draw it as straight as I can. You can see that it did provide a little bit of support, primarily right in this area here would probably be the area where I would pay attention to. But it is a 2050, 2051 area is an interesting point on this daily chart. And then the other 2 areas are the 38.2 fib and the 50% fib pullback. So we were looking at 2015 today after we blew through a minor pivot at 2032. So I had said we can look for the 2015 area, and that's pretty much where we came. We actually came through the 2015 area and closed just slightly above it. We can still have a uptrend and come down all the way down to the 1956 area. I believe where we're going to find some support is maybe just a little bit lower, down around the 1985 to 2000 area. That's the way it's shaping up right now. And if I were to extend this over the 50% fib over like this, you can see there is an area here of very strong resistance down in this area here. And to be exact, about 1992 was an area where we were constantly pushed back. That is an intraday move right there, but we closed below it. And then we sat here again. When we finally busted the move up, we couldn't get escape velocity. We came right back down into that area again. We did a double test, and that was just a confirmation that we're going higher when it moved higher like that. And then we were just off to the races through the end of the month of October. So long story short, right now near term 2015, and then I'm going to look for a firming up of support down as low as 1985. Okay, now we may not get down there. We may have a little bit of momentum carry us down, and then we just start moving back up again. But in this move up, I want to see that we're going to start to make higher highs and higher lows before I'm really convinced of this move. Also, from an Elliott wave theorist standpoint, on a daily chart, right? We've got a three leg right here, and this is a perfect setup. This is a 1, 2, 3, and then we would expect a 4 leg in here, and then a final thrust higher for a 5 leg, giving us that 1, 2, 3, 4, 5 Elliott wave move. Now, within these 3 and 4 and 4 and 5, you can have A, B, C, D patterns or ABC patterns, so it can be a little bit complicated, but overall, I'm looking for us to firm up somewhere in this area here. Should we break the 50% fib of the October move, I think we're going to come down, and this would be our line in the sand, 1956. All right, now when I say that, that means we could probably extend it a little bit, but you can see right in this area here, it's also served a little bit as a resistance point. But if we break it, then folks, we're going to come down and have close to another test, or we're going to go lower. So this is what I'm going to be looking for next week. I think the odds, once we start the week off, are going to be a little bit of a push down, and then we're going to grind higher towards the end of the week. Now that's just kind of how the charts are shaping up, but of course everything can change. You can see here, if I just make this a little bit larger, you can see we had this tremendous upward vector on the 50 EMA, and then just with today's move down, in fact, the past 2 days, we started off on Thursday up at 2077 towards the high. And then on Friday, we came all the way down to about 2011. So that, that was a 66-point move in 2 days. And that was pretty much the bulk of the move, just boom, boom, going right into the weekend here. So, with the employment numbers coming out, um, um, and getting a bad news or a good news is bad news kind of scenario, we're getting a little bit of a sell-off. The markets are a little bit spooked. The Fed funds are predicting generally about a 66% chance of a rate hike. December 16th, that's when the Feds come out and Janet Yellen does her thing at the podium. And we get the announcement at 2, and then she does a press conference at 2:30 New York City time. So anyway, the 50 did not go over the 200. It stopped flat in its tracks. Okay, so this is where we're sitting right now. So going into next week, I want to see if we can hold 2015. If we can hold it, that would be a good thing. If we cannot hold it, 1985 is going to be a stop-off point for us. Okay, that would be the 50% essentially of the move that we made in October. Now, the other scenario, if we do break 61% fib retracement, then what I'm going to do is I'm going to take us out to the weekly of the E-minis, and then we're going to go into a longer fib look here. And you're going to see here, this fib here covers the move all the way down back in March, back on March 9th, 2009, when we hit our lows there of roughly 666, roughly. And that was kind of where we are, and now we're moving up. So projecting that, we've been in a very strong bull market. I do not believe that this secular bull market is going to end, in Q4 of this year. But I do believe it's going to get a little bit choppy. And looking at this, you can see here the Fibonacci here, and that's not a true fib number, but I know in very strong bullish markets or bearish markets, it's a common retracement point, 0.236, and that puts us at 1789. Okay, which is just below the October low that we made November of 2014. So that would be our line in the sand then. If we bust through 1950 and we come down here to test these lows that we made back in August, then we don't have very far to go, really, because that's around 1860 area. So we don't have much further to go to test this area here. I don't think we're going to get there, but we've certainly had a lot of distribution over the past couple of days. You know, there were a lot of people were heading for the hills. So again, and then one other look we're going to do, we're going to go into a tighter time frame. I do like the 2 hour standard 2 hour on a tight time frame. You can see again these Fibonacci nodes here. You can see how we blew through on the 2 hour. And we actually closed at 213, and the fib is at 215.04. So we had a little bit of momentum carry us over. There is a couple of small pivot points, a little minor pivot point sitting right here at 207. We got the psychological barrier at 2000. And then you can see here, I've got another one drawn in. And if I were to extend it out a little bit so that you can see it a little bit better, we start at 1985 down to about 1982. Okay, so there's a lot of congestion down here, but it's still a long way away. And you can see just the severity of this pullback. We just rolled right off the table. There is no divergences in this to the upside, and it is a three-leg down, so that would suggest it could fall a little bit further. Okay, I do believe we're going to get a little bit of a bounce. So what I'm going to do right now, we're a sell on the rally mode. No doubt it's a sell the rally, and as I just kind of widen this out a little bit, I'm looking if we can come up, and I look at a key pivot right in this area right here. Okay, so and let's call it a little bit of a zone here with the 2051 area. If we can clear this 2050 area back to the upside, right? Something like that. Then I'm going to watch for a pullback, which we will get one. And if in this pullback here, we go down, but we stay north of this number, let's say we stop somewhere in this area and we start to move up, then that's going to give bulls a little bit more confidence that that pivot low there held. We've got a new higher pivot low right there, and we're starting to move up. If we take that out right there where we do the reversal, move up, that'll be a good bullish signal. Now there's going to be, you know, near short-term trades that you could take in this area, but this is how markets shift from a down channel to an up channel. You're taking out prior pivot highs or making higher pivot lows, and that's how trends are started, whether it's a 3-day trend or a 3-week trend or 3-month trend. That's kind of where we are right now. So if you'll notice, we haven't done that yet. We are still, you know, we're still in this downward channel right here on this 2-hour chart. So I would look for a move up here like that, but I would then expect sellers to come in and push it back down again. Remember, I want to get us up into this zone right here, which is around the 2050 area. Okay, if we don't make it up there, and the odds right now favor that we will not, we may break the channel, but if we don't make it up there and we come back down again, then clearly sellers are selling any attempted rally that we have here. If we clear this hurdle right here, then that means buyers are short-circuiting the seller standoff here, and now we've cleared this little hurdle right here, which I think is an important one. It's harder to see on a daily chart, but a 2-hour chart you can see it. And then I would look for a pullback, and at that point I'm looking for that pivot low to hold. So that's what I'm going to be watching for our members this Sunday night. I would encourage you to, if you're not a member, I would encourage you to come on in and join us. We got a number of specials going on, but if you're a member, we're going to take a look at the week coming up this week. I think it's going to clearly be an interesting one. Now, one other interesting thing that's happened in the market, commodities are just getting killed. I mean, they're just really getting crushed. And if we come over here and we take a look at the energy market, I do believe there's going to be a time and place but it's not right now. Let's step back out to a daily chart first. You can see this daily chart on oil. We broke this key area right here. We're going to probably come down and test this area, the 38.17 area. In fact, I am predicting a move back down to around the 30 area, and we're at 40 now. So I'm seeing that we could possibly move down another $10 a barrel. We're setting up for some bullish diversions here. If we can come down and test this area, then I'd be more willing to come in and look at some longs. Right now, I'm going to let this thing run, and let's just see how this thing plays itself out. Gasoline, same thing with gasoline. I mean, we rolled right outside of the this movement here. And if I were to just plot a near-term potential down move for gasoline, it takes us down to 114. Folks, if we get down in this area with this bullish divergence, I'm going to be going long gasoline. Now, for our members, I'll show you how you can play it if you're not in the gasoline futures. There are a number of different ways that you can play long gasoline. December and January tend to be strong months for gas. Now, another one that we had a really good trade on, we played it right into the employment numbers, and it really worked out well for us. We did an at the money straddle, a long straddle on bonds, and you can see right here with bonds, we've had this, really all we're in right now is a little bit of a counter trend move. We're stuck in this zone right here, but we've been basically, I've been running this move here. I've got an unbalanced, I converted my at the money straddle into an unbalanced fly, and we're just sitting here on this thing, and it expires next week. But I do believe that any movement in the bond market, okay, any movement in the bond market in this direction is going to run into trouble up here if it gets much higher, and then you're going to see sellers come in here, take out this key pivot here and here, and then we're off to the races. Remember, in times of global stress, bonds move up, interest rates move down. So depending on the severity of the equity move, we're going to see what we're going to see how bonds are. But you know, if you'll notice, for the entire month of November, bonds have been moving down along with equity. So we don't have that normal correlation where bonds go down or bonds go up when equities go down. We've kind of discarded that right here because bonds are telling the market right now that they're starting to price in a potential interest rate hike for December 16th, which is when Yellen comes out and bores everybody to death with her language. I can't understand her, but we don't need to listen to what she says, nor do we even care what they do. All we got to do is follow price action, because at the end of the day, that's what pays us. That's what pays the bills. So this is what we're looking like in the bond market. And for our members, I'll show you ways that we can trade the bond market if you cannot trade futures. So there's a number of different things at work there. And then finally, in the currency market, there's going to be some great plays here. You can see whether you use the dollar or the euro, or you do the euro dollar or dollar euro forex, or you trade FXE or UUP. There's a number of different ways that you can play a stronger dollar. And if Yellen, if they do in fact raise the rates 25 basis points, I think the dollar, as I said, is going to come up and test this pivot high over here at 171, the dollar index, and I think it's going a little bit higher. Right now, it's just kind of resting, sitting here atop this what was a resistance zone. This is kind of where it's sitting right now. Okay, and meanwhile, the euro is going to get weaker, and before the Feds meet on December 16th, early in the year, or early in December rather, I think the first week in December, Mario Draghi is going to come out and they're going to talk about what additional stimulus they can do. There is no inflation anywhere globally. In fact, there's some signs of deflation. So Janet Yellen's between a rock and a hard place. Mario is going to be looking at putting more stimulus out there, and if we raise the rates, you're going to see a huge swift move to the downside. In fact, I'm calling for the euro to go below parity towards the end of this year into January. At least that's the way it's looking right now, and the dollar is going to get stronger. We've already played the euro to the downside once. I'm not going to step in front of Mario, but depending on what he does, We may come in and do a straddle on the euro as well, because I guarantee you this thing is going to move dramatically. And then one other final commodity here that is just, it's like a Timex watch. It keeps on ticking, keeps on giving, but giving to the downside for the shorts. You can see here I'm looking at possibly coming down sub 1,000 in gold. Okay. Silver is going to get a little bit weak as well. I've been playing silver to the long side for a long time, but just selling puts out of the money. All right. And I own a little bit of SLV, but I said the silver trade is a 2 or 3 year trade. SLV is not going to go to zero. So it's just a long-term kind of long hold kind of thing. Because when inflation takes hold, which probably won't be till 2017, maybe 2018, it's going to move very quick and it's going to surprise people. But right now there is none. But you can see where gold is. I would not be touching gold to the upside. It's more of a sell than a buy. And then there's a number of stocks that got crushed this week. But there were some holdouts that did very well. One of our favorites, and I'll put this up here on our free weekly update, is UHAL. Look at this guy right here. It just keeps right. It's like a Timex clock. Again, it keeps ticking. It keeps going in the direction I had talked about. And you'd never know that the market's been selling off at all. Today it was up over $9, almost $9.50. It's an expensive stock. It's setting up for a little bit of a pullback here, but it's a very strong one. And and the other one that we had here was this one right here. Once we had this big sell-off in Sherman-Williams, I said we've got to jump into this, selling puts under here, and it's worked out well for us. There are several others that we've been in and out and made some profits. So members, I will see you Sunday night for our session for the upcoming week. If you're not a member, again, check out our special. Here we've, the year has been really, really cool for us in 2015. I think 2016, there's going to be some huge plays in the commodity markets. And I think there's going to be some great opportunities in volatility and equities. Okay, so have a great weekend, everybody. And members, I'll see you Sunday night. Take care, all.